streaming service.
Yeah.
Yes.
You can please check if we are live once.
I'm checking if it's live on YouTube. Yes, you're live. 9 people are watching.
Yeah, thank you.
Welcome.
Hello, hi, very good evening, my dear friends. I welcome you all CA Inter students on discussion about RTP of taxation subject, a very brilliant subject, and we have got our RTP for May 2024 attempt. So today we'll spend some good time on discussion about our RTP of May 2024. So let's wait for a couple of minutes. Then after that, we'll proceed and go ahead with the discussion, my dear friends. Thank you. And any doubts you can feel free to comment in the chat box. I'll be more than happy to reply your query. Yes, now. So without any delay, my dear friends, let's start our discussion and proceed to talk about RTP of May 2024. First of all, my dear friends, let me tell you one interesting concept. That is, when we talk about this RTP revision test paper, which ICA has released few days back, one thing is always important to be noted, that is for a subject like taxation, where there are always some amendments which keep coming up for every attempt. And as you all are aware that for May 2024 examination, amendments which are made up to 31st October 2023 are applicable for May 2024 examination. So it is utmost important that we guys get a clarity of thought on the amendments and also talk about RTP. Because most of the times we have seen a situation and circumstances where straightforward questions come in the examination from RTP or from amendments. That is the reason why it's very important that we have a good level of clarity of thought on this RTP revision test paper. So without delay, let me share the screen and open the RTP and discuss interesting. And from May 2024 attempt onwards, and I'm sure you guys know very clearly that direct tax is for 50 marks, indirect tax is for 50 marks. So 100 marks paper is split into two components, direct tax and indirect tax, wherein direct tax is 50 marks, indirect tax is again 50 marks. And it is now very clear that both income tax and GST are very crucial for scoring our marks in the examination. So without delay, let me share the screen, my dear friends, so that we can start our discussion. 1 second, I'm sharing the screen. Yeah. I'm sure the screen is visible for all of you. Can you please confirm? Excellent. Let me start the discussion. So paper 3 is taxation, my dear friends. Now that we have got only 3 papers in group 1, 3 papers in group 2, and in group 1, the third paper is your taxation paper. And in that we have got 3A and 3B. 3A is about income tax and 3B is about GST. So first let's talk about 3A, then we'll get into 3B, that is GST part. So let's look at the first interesting question, my dear friends. And I'm sure you guys know very clearly that first question will always be a case study based question. And you can find here there's an interesting case study on which there are 5 interesting questions what we have got here. And after that 5 questions on case study based, you also have got independent MCQs, question number 6, question number 7, and question number 8. And after that, your theory based, that is your what do you call practical based solutions will start other than multiple choice questions. Come on, let me get back to the first interesting discussion, that is about case study based MCQ. Now, whenever we talk about case study based MCQ, it is important that you focus on that particular question. What is the relevant part for you? Yeah, the first interesting question, my dear friends. Mr. Akash, age 47 years, is a CEO of BSC Enterprises Private Limited. And during the, what is that language, my dear friends? During the previous year, 23-24, he has earned the following incomes. What is the income he has earned? Salary, 45 lakh rupees. Long-term capital gain on sale of equity shares, STT paid 6,54,000. And we all know that long-term capital gain on sale of equity shares on which STT is paid is taxable at the rate of 10% on amount exceeding 1 lakh as per section 1128. Next line. Dividend of 12 lakh rupees from shares of Indian company. Interest on savings bank account with SBI, 16,000 rupees. And this interest is taxable, but we can also take deduction under section 80 TTA. TTB is for senior citizen, TTA is for other than senior citizen. And the deduction under section 80 TTA is interest or 10,000, whichever is lower. Next point. Interest on fixed deposit with BOB, Bank of Baroda, 45,000. And there is no deduction as such. It's just taxable income. Akash has made following payments towards medical insurance premium for the health policies taken by for his family members. For medical insurance premium, my dear friends, we get deduction under section 80D. And 80D has got a limit which specifies that for self, spouse, and children, dependent children, all three put together 25,000. Anyone senior, 50,000. And for parents, need not be dependent, it is 25,000 for father and mother together. And if anyone is senior citizen, it is 50,000. And deduction is also allowed for preventive health checkup subject to maximum 5,000. So let's look at the story now. Medical insurance for his spouse age 43 years, 13,500 by check. Wonderful, will take deduction. Medical premium for his mother age 65, 26,670 by check. No problem, still we can take deduction. Age is 65 years, so resident senior citizen, where the limit is 50,000. Preventive checkup 5,500 each for his wife and mother in cash. Even though it is cash, we can still take deduction because preventive checkup can be paid in cash also. But preventive checkup has got a maximum limit of 5,000 rupees. Even though what is paid is 5,500, what deduction will get is only maximum 5,000. Next. Akash also incurred medical expenses by credit card of 17,000 rupees for treatment of his mother. Once for mother, we have taken deduction for medical premium. Again, we can't take deduction for medical expenses. Both are not possible. Medical expenses are allowed as deduction only to that senior citizen who is unable to take medical insurance policy. But here, since medical premium is paid, medical insurance policy is there, you again cannot take deduction for medical expenses. Next. And 27,000 for his father, who is 67 years old. That can be considered. But father and mother put together, the limit is 50,000. That has to be kept in mind. That is very important. Next slide. Mr. Akash also incurred medical expenses by credit card. That is done. Yeah. He has multiple life insurance policy. The details of such policies are given here under. Before I get into that table, let me highlight some interesting point with respect to life insurance policies. Then we'll go there. Clear? Done. This is first. When I talk about life insurance policies, my dear friends, number one, premium paid is allowed as deduction under section 80C which is subject to maximum limit of 1.5 lakhs. And number 2, maturity amount is exempt if premium payable does not exceed 10% of sum assured. And this we are talking about policies which are taken on or after 1/4/2023. Now, third point. In case of policy is taken, wait a second. Here it should be, let me change this language. Policy is taken before 1/4/2023. And in case of policy is taken on or after 1/4/2023, maturity amount is exempt if premium payable does not exceed 10% of sum assured, and annual premium does not exceed 5 lakh rupees. This is an interesting amendment which has come up with effect from 1/4/2023. So if policy is taken before 1/4/23, what is the answer, my dear friends? Maturity amount is exempt if premium payable does not exceed 10% of sum assured. But if policy is taken on or after 1/4/2023, maturity amount is exempt if premium payable, what's that line, my dear friends? If premium payable does not exceed 10% of sum assured and annual premium does not exceed 5 lakhs. And premium payable figure for above purpose is considered excluding GST. That is important point. Is considered excluding GST. That's one important point which is to be noted, my dear friends. Make sense, right? Now let's look at the table. Come on. Now comes the real game. He has multiple life insurance policies. The policies are X, Y, Z, A, and the third one, last one is term insurance policy. I'll not talk about term insurance policy because term insurance policy money will come only upon death of the person. And if amount of the insurance policy is coming on death of the person, that amount is not taxable. That amount is not taxable. So we are not concerned about tax treatment for term insurance policy. Now let me talk about X policy. Now, what is the date of issue? 1/4/2017. That means it is before 2023. Let me look at what is the sum assured, my dear friends. The sum assured is 5 lakhs. What is 10% of sum assured? 50,000 rupees. And what is the annual premium excluding GST? It is 40,000. Since annual premium excluding GST is less than 10% of sum assured, maturity amount of X is exempt. Maturity amount of X is what, my dear friends? Exempt. In case of policy X, annual premium before GST does not exceed 10% of sum assured. So what will happen is, my dear friends, straight away maturity amount is exempt. Correct? I'm sure we got clarity on this point, everybody. All of us, please reply. Come on. Excellent. Very good. Now let's look at the next policy, guys. So policy Y, which is taken on 1/4/2023. When it is taken on 1/4/2023, my dear friends, it is on after 1/4/23. Annual premium is 3 lakhs. What is the sum assured? Sum assured is 3,30,000. So that means this 3 lakh is definitely less than 10% of sum assured and annual premium is not more than 5 lakh rupees. So what will happen is Y is exempt. Let me look at Z. Z 1/4/2025 and annual premium is 2 lakh. and sum assured is 25 lakh. 25 lakh, 10% is 2,50,000. So annual premium is less than 10% of sum assured and it does not exceed 5 lakh. So this is also exempt. Now coming to A. Annual premium 2,50,000. Sum assured 27 lakh. 10% of 27 lakhs is 2,70,000. So my annual premium 2,50,000 is less than 10% of 27 lakh. So that will also be exempt. But the problem here is if you combine Y, Z and A, if you combine what? Y, Z and A, which are taken on or after 1/4/23, my dear friends. Which are taken on or after 1/4/23. Since Y, Z and A are taken on or after 1/4/23, my dear friends, on or after 1/4/23, my dear friends, the point to be noted is very clear that all these three combined together, 3 lakh plus 2 lakh plus 250. That means how much? 3 plus 2 is 5. 5 plus 2.5 is 7.5. I cannot take exemption for 7.5, but I can take exemption only to the extent of annual premium of 5 lakh. So I have to combine and take either Y and Z because 3 plus 2 is 5, or I can take Z and A because 2 plus 2.5 is 4.5, but I can't take exemption for Y and A together because Y and A put together, it is coming to 5,50,000. So Y and A put together, I cannot take exemption. But I can take for Y and Z, I can take for Z and A. But Z and A combined together, it will be 4,50,000. Y and Z combined together, it is 5 lakh. So what is most beneficial? You yourself can tell. It is nothing but Y and Z because combined together, it is coming to 5 lakhs. See, what a brilliant question. This question is purely based on the amendment which has come up with respect to the life insurance policy. Very, very interesting point. Clear? So to repeat once again, my dear friends, in case of life insurance policy, if policy is taken before 1/4/2023 and if premium payable does not exceed 10% of sum assured, then what will happen is very clearly maturity amount is exempt. And if policy is taken after 1/4/2023, my dear friends, maturity amount is exempt only if the premium payable does not exceed 10% of sum assured and the annual premium combined for all policies together does not exceed 5 lakhs. But if it is exceeding 5 lakh, we can take exemption for 2 policies. I mean, when I say 2 policies, I'm saying you can't take combined more than 5 lakhs. Clear? Good. Now let's look at the MCQs. Come on, what is that they're asking? On the basis of facts given above, choose the most appropriate answer to question number 1 to 5 below based on the provisions of Income Tax Act 1961. What are the life insurance policies in respect of which Akash should be eligible for exemption under section 1010D in respect of maturity proceeds? Choose the option most beneficial to Akash. You have to observe that they asked about that option which is most beneficial to Akash. Now tell me guys. B is anyways term insurance policy, which is not taxable. X, we can happily enjoy exemption. And in Y, Z, A, all three together is crossing 5 lakh. So either I can take Z and A or I can take Y and Z. But I can't take Y and A because Y and A together is 5,50,000. So what is the most suitable option is combine Y and Z. Because Y and Z, if you combine, you will get 3 plus 2, 5. But Z and A, if you combine, you will get 4,50,000. So I can take for Y, I'll take for Z, and I'll also take for X. So let's see the options. Option A, X, Y, and Z. Option B, X and Y. Option C, X, Z, and A. Option D, Y and Z. Obviously, the most suitable option is option A, X, Y, and Z. In order to benefit the maximum exemption, this is the most suitable option. Brilliant. Next question, guys. What would be your answer to MCQ 1 if Akash has surrendered LIC A in assessment year 26-27 and claimed exemption under section 1010D in respect of such LIC? That means they are clearly telling for in respect of A, he is definitely going to take exemption. So A, for sure he is going to take. A is how much? 2,50,000. 2,50,000 is anyways going to take exemption. X, anyways he will get exemption. Why he can't combine with A? Because Y and A put together it is coming to 5,50,000. But you can definitely take exemption for Z because 2 plus 2,50,000 is 4,50,000. It's not crossing 5 lakh. So the exemption will come in respect of X, Z, and A. So when I say X, Z, and A, the most suitable option is, of course, option C, my dear friends. This is how you need to tackle the MCQs. It is important that you have to understand the essence of that particular question and answer that particular question in that lines of the essence, what they are talking about. Then only you'll get the accurate answer. If not, the answer will go for a toss. Yeah, next. Third bit. What would be the amount of deduction available to Akash under Chapter 6A for assessment at 24-25 if he has exercised the option to shift out of default tax regime? We know that default tax regime is 115 BAC, but there will not get majority of deductions, but we'll get definitely under optional tax regime. What is the amount of deduction they're asking? Let's calculate. From starting, let me go. Salary, capital gains, dividend, no. Interest on savings back 16,000, but I can take deduction of 10,000 rupees under section 83TTA. Next. Medical insurance premium for spouse 13,500, I can definitely take it. And medical insurance for mother 26,670, and below they gave for father it is 27,000. So 27,000 plus 26,670, both put together, I can take only 50,000. But I can't take more than 50,000. Then. And for all the life insurance policies put together, all big numbers are there. But ATC has got a maximum limit of 1,50,000. We know that very clearly that ATC has got a maximum limit of 1,50,000. We any day cannot take more than that. So let me calculate what is the amount of total deduction available. Total deductions under Chapter 6A. ATC, 1,50,000. ATD, come on, what is there in ATD, my dear friends? Already we discussed that. For spouse, it is 13,500. Father and mother put together, I can take maximum 50,000. Preventive checkup, I can take only maximum 5,000. So that's the story of ATD. Other than ATD, my dear friends, I also have got ATTTA, which is coming to 10,000 rupees. So my total deduction under Chapter 6A is coming to 2,28,500. which is the total deduction, what I can take under Chapter 6A. In this particular question, they basically asked, what is the deduction you get under Chapter 6A, which is 2,28,500. So what is the most suitable option, my dear friends? Come on. It is 2,28,500. The answer is option C, my dear friends. See, you have to understand that case study MCQs will anyways definitely take some time. Yeah, good. Thank you. Thanks for the cooperation. Good. Question number 4. What is Aka's tax liability for AY 24-25 under default tax regime under 115 BSc? They're talking about default tax regime, my dear friends. And that too, they're asking about tax liability. So when they talk about tax liability, let's calculate properly, my dear friends. Come on. Let's start doing it. Yeah. I've shared the screen. So what is covered in the question is salary income, 45 lakhs, less deduction under 16(1)(a), which is 50,000. So my taxable salary will come to 44 lakhs 50,000. and there is a long-term capital gain, STT paid on equity shares. And that figure is, my dear friends, 6,54,000. Dividend, 12 lakh rupees. Interest on savings bank, and interest on fixed deposit, they gave it as 45,000. And we can't get ATD deduction, we can't take ATC deduction, we can't take ATTD deduction, because we're talking about something called default tax regime. That's it. So this is called as gross total income, or for that matter, total income, because we cannot take Chapter 6A deduction. $52,85,000, my dear friends. So what will happen now? What is the tax liability? Come on, my dear friends. What is the tax liability? Come on, what is the tax liability, my dear friends? Up to 3 lakhs. What is the figure? Come on, friends, please speak out. Up to 3 lakhs, the tax is 0. 3 lakhs to 6 lakh at the rate of 5%, which comes to 3 lakh and 55%, which comes to 15,000. 6 lakhs to 9 lakh at the rate of 10%, which is 3 lakh 10%, which comes to 30,000. 9 lakh to 12 lakh at the rate of 15%, which comes to 3 lakh into 15%, which comes to 45,000. 12 lakh to 15 lakh at the rate of 20%, which comes to 60,000. So up to this point, there is a tax of 1,50,000. And now, above 15 lakhs at the rate of 25%, which will be 52,85,000 minus 15 lakhs into 25%. So that is coming to 9,46,250. So total tax is 1,50,000 plus 964,250, which is coming to 10,96,250. And apart from this, my dear friends, I'm also required to add something known as surcharge at the rate of 10%. You might be shocked, sir, why surcharge is coming? Obviously, surcharge will come because total income is more than 50 lakh rupees. Yeah. Once again. Right. We will also add HEC at the rate of 4%, which will be on tax plus surcharge. But there is one interesting point to be noted here. That is, out of the total income what we have got, my dear friends, first of all, let me do a small bifurcation here. Before I get into that stage, let me do a small bifurcation here. That is, on long-term capital gain STT paid, we'll calculate tax at the rate of 10% on above 1 lakh, which is nothing but 5,54,000 into 10%, which is coming to 54,500, 55,400. Now, balance income is taxed at slab rates. That is 52,85,000 minus 6,54,000. How much is that figure? 52,85,000 minus 6,54,000, which is coming to 46,31,000. So let me calculate tax on that first. Yeah, so that we are fully clear. On 46,31,000, when I calculate, my dear friends, up to 3 lakh it is nil, 3 lakh to 6 lakh 5%, 6 lakh to 9 lakh, 9 lakh to 10 lakh, 12 lakhs, 12 to 15 lakhs, above 15 lakhs 25%. So this will be 46,31,000. Just a second. Let me add the columns. Give me a minute. So let's recheck once again what all the incomes we have covered. Everything is covered or not. Let me just once cross check whether all incomes are covered or not. Then we will proceed. Come on. If I look at the whole story of the starting of the question, my dear friends, first of all, I have got salary income of 45 lakhs. That income has been captured. 45 lakhs, I have taken standard deduction of 50,000. So 44 lakh 50,000 is a balance figure. Long term, I have taken on equity share 6 lakh 54,000. Dividend income. Dividend income 12 lakh rupees. Correct? 1 second. Oh, craziness. It is 12 lakh rupees dividend income. Then, the all figures are correct, right? Yeah. 16,000 interest on savings bank account, interest on fixed deposit 45,000. And deductions are not get any deduction because we are talking about something called default tax regime. So let me change this number, my dear friends. Hold on. So balance income, which will be tax rate slab rate here will be 63,65,000 minus 6,54,000. 63,65,000 minus 6,54,000. So this figure will be 57 lakhs 11,000. Is that the only thing? Above 15 lakh, 25%, right? So above 15 lakhs will be let me cross check with the options. Option is not matching, some number error. Let's cross check, my dear friends. Hold on. Is all the numbers captured perfectly? Let's once recheck once again. Salary of 45 lakhs. From that 45 lakhs, what is that we have taken? Option of standard deduction of 50,000. So it is 44,50,000. Perfect. 6,54,000. Dividend 12 lakhs. Interest on savings bank. Interest on FD. That's it, right? Then why the option is not matching? Just give me 1 second, guys. 1 second. 1 second. Yeah. Yes, my dear friends, get back. There is a small typo error there. Above 15 lakhs, the figure has been captured as 25%. That just has to be 30%. That's it. That's the only typographical error there. So let me just change that, my dear friends. Above 15 lakhs has to be 30%. So let me just change this, my dear friends. So that figure is working out to. How much is that figure working out to, my dear friends? Come on. Come on, friends, please speak out. So it is 12,63,300, and both put together, how much is that figure, my dear friends? 14,68,700. On that, definitely I'll add surcharge at the rate of 10%. So when I add surcharge at the rate of 10%, what is the total, my dear friends? Come on. This will be 14,68,700 plus 1,46,870, which is coming to 16,15,570. On that 16,15,570, I'll also add HEC at the rate of 4%, which is 64,622. And my final tax figure is working out to 16,80,192, my dear friends. And this will be rounded off as per section 288B, which comes to 16,80,190. That said, it was just that in one place, instead of 30%, we have taken that 25%. So once you take that 30%, bang on, your answer is on toss. Clear, my dear friends? So let me go back to the question now. So if I go back to the question, what is the Akash tax liability for Aspen 24-25 under a default tax regime under section 115 BAC? The answer will be 16,80,190. That will be the answer for fourth point. Next fifth question. What is Akash tax number 24-25 if he has exercised the option to shift out of default tax regime? Everything remains same, but just that you will get chapter exit deduction. How much is chapter exit deduction? Already we calculated 2,28,500. So what I'll do is, from the same working, from the same working. What is my total income? 63,65,000, correct? So my gross total income is 63,65,000. From that, I'll reduce Chapter 6A deduction. How much is my Chapter 6A deduction? 2,28,500. Already we discussed this, my dear friends. So this becomes my total income. And when I calculate tax, my dear friends, tax on my LTCG, already we have captured that number, which is nothing but 55,400. Balance income at slab rates. And the balance income is, what's the balance income? 57 lakh 11,000 rupees. Balance income is 57 lakh 11,000. On 57 lakh 11,000, the balance income slab rates we already know, my dear friends, up to 2,50,000 nil, 2.5 to 5 lakh 5%, 5 to 10 20%, about 10 30%. So technically, up to 10 lakhs, the tax will become 1,12,500. Already we know that point, my dear friends. So up to 10 lakhs, it becomes 1,12,500. The balance, it's balance at 30%, which comes to 47 lakh 11,000 into 30%. So total tax will be this plus this plus this. 15 lakhs 81,200. To this, I'll add surcharge at the rate of 10%, which will be 15,81,200 into 10%. So my total will be 15,81,200 plus surcharge, 17,39,320. Perfect. Is it so? 47,11,000 into 30%. So this becomes tax on long-term capital gain is fine, because in that there is no problem, because long-term capital gain is taxed at the rate of 10% on amount exceeding 1 lakh. You got what I've done now, my dear friends? See, what is the gross total income? What is the gross total income figure is correct, right? Yes. So on the capital gains, we'll calculate tax at the rate of 10%, which comes to 55,400. Correct, my dear friends? Come on, please reply. And the gross total income, what I can do is, in fact, I can actually take 62,65,000, because anyways on that 1 lakh there is no tax. So if I take that figure, my dear friends, because overall correction figure is happening, that's the reason why I've done like this. You're getting what I'm saying? So the balance income will be how much? The balance income will be, this figure minus 5,54,000. So the 54,82,500. So this balance figure will be 44,82,500 into 30%. You're getting what I'm saying? Exactly. So to that, we'll also add HEC, my dear friends, which is health and education at the rate of 4%, which will take this figure into 4%. So total after HEC will work out to this plus this. See, the reason we have done like this is very simple, my dear friend. Up to 1 lakh, there is no tax at all. Above 1 lakh only there is tax. So for that reason, I've captured only 1 lakh figure. In the previous case, it didn't make any difference, because ultimately in the previous case, the whole logic was there was no deductions at all. That's the reason why it didn't make any difference. You're getting what I'm saying? But here also, instead of showing 654, you can show 554 also. Friends, everybody, are we clear? Good, fair enough. So that's the story of this interesting first question, my dear friends, which clearly makes a lot of sense. And what is the answer for this final question, my dear friends? 17,30,470, which is nothing but option A, my dear friends. A very interesting question. You have to understand that we have taken so much of time on this discussion for a simple reason, because case study based MCQ generally takes some sweet time to understand, because we cannot afford to take any chances with respect to this kind of discussion, which is of utmost important, my dear friends. Getting my point, everybody? So can I move forward without delay? Come on, friends, please reply. Everybody, I'm waiting for your reply. Brilliant. Thank you so very much. Let me proceed. Thanks for your participation. Good. Next question, my dear friends. Come on. Now your time will be saved a lot. Proceed. Mr. Anil started business of manufacturing tables in February 2024. He follows, what is that he's following, my dear friends? Mercantile system of accounting. He purchased wood from Mr. A, B, and C. And details of purchases and payment made are as under, my dear friends. Now, what is that they have given? See here. Date of purchase is given. Micro enterprise, small enterprise, we are talking. Wow. This question is related to amendment, which is there in section 43B, my dear friends. 43B, we discussed that in case of MSME, my dear friends, especially micro and small enterprises, payment has to be made as per the agreement, and the agreement cannot specify more than 45 days. And if there is no agreement, my dear friends, then in that case, the payment has to be made within 15 days. Getting my point, everybody? Come on, my dear friends, please reply. This question is specifically related to amendment which has come up in section 43B, my dear friends, which clearly specifies that in case of payment to micro and small enterprises, agreement cannot specify more than 45 days. That means if there is a written agreement, it cannot be more than 45 days. But if there is no written agreement, my dear friends, what is the maximum time limit, my dear friends? The maximum time limit is 15 days. You're getting what I'm saying? Exactly. And here, one more interesting point to be noted, my dear friends, that is, in case where payment is not made within that respective time, then what will happen is very clearly, my dear friends, deduction will come only in the year in which payment is made. Come on, see the question. First case, date of purchase 15 to 24, purchase amount 5 lakhs, within 30 days from the date of purchase. So agreement has specified 30 days, very good. When is the date of payment? 29th March. If it is 29th March, that means it is after 30 days, but still no problem. I can take deduction in 23-24 because payment is made in 23-24. Next case. B, a small enterprise, 17th March 24, purchase amount 7 lakh rupees, no written agreement. When there is no written agreement, my dear friends, what will happen? You get time only for 15 days. 17th March, 15 days will come to March, 14 days balance. Then April 1st. So by 1st April, payment has to be made. When is the payment made? 15th April 2024. So deduction will come in 24-25, but not in 23-24. Next. 25-3-2024, 8 lakh rupees within 40 days from the date of purchase. Within 40 days from the date of purchase. But here you have to understand first and foremost important point, this is a medium enterprise. If it's a medium enterprise, this amendment in 43B will not apply. Because amendment in 43B is only in relation to micro or small enterprise. If it is medium enterprise, then amendment in 43B will not apply. If amendment in 43B will not apply, we can happily take deduction even on accrual basis. So I can take deduction for this 8 lakh, I can take deduction for this 5 lakh. but not for this 7 lakhs. Now, what is that they're asking? How much deduction will be available to Anil? I can take for 5 lakh, I can take for 8 lakhs, total I can take for 13 lakh rupees. So answer is option C, my dear friends. A very, very brilliant question. See, such a brilliant question on amendment. That's how they keep asking in the exam, my dear friends. Next point. Sunil took an education loan of 8 lakh rupees on 1/7/23 from State Bank of India, Mumbai for his son's MBA from University of Oxford, UK, and remitted the amount through the same bank, which is authorized under liberalized remittance scheme. In this case, my dear friends, whenever education loan is taken, and that is whenever what, my dear friends, education loan is taken and that amount is remitted outside India on amount exceeding 7 lakh rupees, 0.5% TCS is charged. He further remitted 2 lakh rupees on 15/10/23 to his son for his personal expenditure out of his personal savings through Bank of India. Already we crossed 7 lakh. Already we crossed 7 lakh because total and remittance scheme already 8 lakhs is over. 8 plus 2 now is 10. On this 2 lakh, my dear friends, let me tell you, after 1st October 2023, there's an amendment which specifies that after 7 lakh rupees, the TCS rate will be 20%, my dear friends. It is not even 5%, it is straight away 20% TCS. Sunil also remitted 6 lakh rupees on 28 March 24 out of his personal savings under LRS to Union Bank of India for his sister's medical treatment in London. When it is for medical treatment, my dear friends, on this 6 lakh, we will apply TCS at the rate of 5%. Even though it is after 1/10/2023, if it is for medical treatment, it is 5%. What is the amount of tax to be collected from Sunil in respect of remittance of amount to his son and sister? On 1 lakh, 0.5%. On 2 lakh, 20%. And on 6 lakh, it will be 5%. So the most suitable option is option B, my dear friends. This is an interesting question in relation to amendment related to TCS. Next point. Question number 8. Garg, age 45 years, resident in India, having total income of 5,70,000, comprising of long-term capital gain tax under 112 70,000, long-term capital gain under 112A 1,50,000. Even though it's 1,50,000, we'll pay tax only on 50,000. And short-term capital gain are 111A 1 lakh. 15% is the tax rate. Other income 2,50,000. Compute tax liability for AY 24-25 under a default tax regime 115 PAC. Friends, you have to understand that if it is default tax regime, my dear friends, what will happen is very clearly under default tax regime, if the total income does not exceed 7 lakh rupees, we have got rebate of tax payable of 25,000, whichever is lower. But this rebate concept will not apply to tax payable under section 112A. But it will still apply to 112 and 111A, but not to 112A. 112A, what is the income? 1,50,000. On 1,50,000, first 1 lakh will not pay tax. Balance 50,000 will pay tax at the rate of 10%, which comes to 5,000. On that 5,000, if you add HEC, it comes to 5,200 rupees, which is nothing but option B, my dear friends. Moving ahead to the next point. That's it. That's the story of our interesting multiple choice questions. Now let me proceed to discussion about the practical based questions other than MCQs, my dear friends. Miss Rita, an Indian citizen and an MBA from Howard University, was employed in AFL LLP of country A since June 2016. She came to India on 15/11/2023 and joined as the CEO of AutoFit Limited. Rita was in India before she left overseas education in May 2012 and was subsequently employed outside India. Oh, so prior to 2000, after 2012, she is never in India. She came to India only on 15 November. She has an interest income of 2,40,000. Wait a second. There is no income tax in country A. She has an interest income of 2,40,000 net in country A and salary income from AFL LLP of 15 lakh up to the date of her return to India in financial year 23-24. Salary income computed of Rita from AutoFit is 13,50,000. Where is AutoFit, my dear friends? out of it is in India. And she has earned dividend of 3 lakh from Indian company. What would be the residential status of Rita and her total income for AY 24-25? First point to be noted here is very clear that she has come to India in 2023 November after a long gap. When she is there 15/11/2023, my dear friends, she can't satisfy 182 days condition. She cannot satisfy 60 days and 365 days condition. Because 60 days can be satisfied, but 365 days can't be satisfied. Because last 4 years, she is not there in India. So she will definitely become a non-resident by looking at the basic condition. But let's also look at something called deemed resident concept under section 618, which will apply only to an Indian citizen who is not liable to pay tax in any other country by reason of his domicile, residence, or any creditor of similar nature. And total income other than foreign source is more than 15 lakh. First point, if you see, she's an Indian citizen. Okay. And there is no income tax in country A. That is also satisfied. Salary income from out of it is 13 lakh 50,000. She has a dividend of 3 lakh from shares in Indian company. So total is 16 lakh 50,000. So she will definitely satisfy all the 3 conditions of deemed resident, and her residential status will become resident but not ordinarily resident. And resident but not ordinarily resident shall be taxable in respect of Indian income and will also be taxable in respect of foreign income if it is business income controlled wholly or partly from India, profession income if it is set up in India. Clear, my dear friends? Everybody's up. Excellent. Next, question number 10. Mr. Raj, a resident in India, owns 2 properties, one in Delhi, one in Kanpur. The property in Kanpur is self-occupied by Raj. However, property in Delhi is let out throughout the year. Particulars are as under standard rate, municipal value, fair value, rent received, municipal taxes clear. Municipal tax paid by Raj is 3,500. Raj has taken a loan, but the problem is Kanpur house is self-occupied. But it's self-occupied, we can't take deduction for municipal tax because NAV is nil. Raj had taken a loan from SBI of 35 lakhs, 12% per annum in April 2021 for purchase of Delhi house. Stamp duty value is 40 lakhs. And he has purchased a plot in Kanpur in May 21 and the construction has begun in June 21. And the property construction completed in December 2022. So loan is taken in, how much loan is taken? 25 lakhs at 10% on 1/7/21. When loan is taken on 1/7/21, my dear friends, construction completed in 2022, there is a clear-cut probability of pre-construction period interest. Yes or no, my dear friends? And the pre-construction period interest is allowed as deduction in 5 equal installments, which you have to calculate properly. And during previous year, has earned salary income of 18 lakh. Compute total income of Raj under both tax regime. A pretty simple question, but you have to keep in mind that under default tax regime, you cannot take deduction for self-occupied property, and loss under house property cannot be set off with other income in default tax regime. And also, we should not take Chapter 6A deduction. That point you have to keep in mind. But when we talk about optional tax regime, we can take Chapter 6A deduction, we can take house property loss for self-occupied, and loss under house property we can set off with other income. And we can also take Chapter 6A deduction. And in this particular question, my dear friends, we will also get deduction under a beautiful section called 80EEA for Delhi house. The reason being very clearly because he has taken a loan of 35 lakh for purchase of Delhi house. That loan is stamp duty value is 40 lakh. So stamp duty value does not exceed 45 lakhs. And the loan is sanctioned between 1/4/19 to 31st March 22, my dear friends. In that case, we'll get deduction. In that case, we'll get deduction amounting to 1,50,000 maximum. So that point also has to be kept in mind. Clear, friends? Excellent. Don't get it out. Why for Kanpur we can't take? Because Kanpur story is construction, my dear friends. And that 80AA is only for purchase of property. Good. Next question, guys. Question number 11. Mr. Rajkumar bought a residential house for 5 crores in March 2016. He entered into agreement for sale of the said residential house with Nikita in July 23 for 17 crores. Sale proceeds were to be paid in the following manner. 10% through account pay bank draft on the date of agreement. If any advance is paid on or before the date of agreement, then stamp duty value will be considered on the date of agreement. If it is less than, stamp duty value on the date of registration. 80% on the date of possession, balance after completion. Nikita was handed over possession on 10/11/23 and the process was completed on 5/2/24. Value of the property in July 23 was 19 crores, but the value of the property on 5/2/24 when registration was done is 20 crore. Even though it is 20 crore, for capital gain purpose, we'll take 19 crores, my dear friends. And we'll take expenses on transfer, which is 1% on sale consideration, that is 17 crore. He purchased another house for 13 crores, sold a house, purchased a house, I can take 54 exemption. But maximum exemption I can take is only 10 crores. Because if the new cost of the house is more than 10 crores, only 10 crores is considered for the purpose of exemption. Then what will be the capital gain if Rajkumar transfers the house for 15 crores? If the new property is transferred within a period of 3 years, whatever exemption is taken is reduced from the cost subsequently. Clear, my dear friends? So that working already we discussed during our lectures. A very simple question to solve. But of course, take indexation while solving. Next point. Rajesh is a working partner in Sunflower Associate, a partnership firm. He has contributed 15 lakh as capital in the firm. Partnership deed authorizes payment of interest to partners at 13%. Even though 13% they can pay maximum 12%, that extent only is taxable in the hands of partner. Whole of the remuneration is available as deduction to Sunflower Associates. They are paying 20,000 per month as remuneration. Very good. Rajesh has set up a unit in Special Economic Zone in May 2017. If it is SEZ, we can take exemption, profits into export turnover divided by total turnover. And that exemption will come only under optional tax regime, but not under default tax regime. Next. Export turnover, even though entire export turnover is 45 lakh, only 40 lakhs has come by 30th September. So for exemption purpose, only 40 lakhs will be considered. During previous year 23-24, Rajesh has commenced the business of warehousing facility for storage of edible oil. But that is not a specified business. Getting my point, everybody, my dear friends? Good. Come on, what is the point? Net profit is 7,50,000. And the following items are what, my dear friends? Come on, following items are debited to P&L account. Personal drawing 70,000, add back. Advance income tax paid, add back. Purchase of warehouse building, add back and take depreciation. Following items are credited to P&L account. Interest on savings bank account with post office. We have to reduce them and show under income from other sources. But for post office savings bank account, we can take exemption, my dear friend, up to 3,500 rupees. For individual account, joint account 7,000. We know that already. Interest on FD with SBI, reduce that, show under other sources. Dividend, reduce that and show under other sources. He has paid premium of 60,000 on life insurance policy in the name of a married daughter. No problem, still we can take 80C deduction. Compute total income and tax payable by Rajesh under default as well as normal. If it is default, then don't take 10AA deduction, don't take 80C deduction. And if it is optional, then obviously you take 80C, 80TTA, 10AA, all that you take. And since 10AA is involved, you should also get in your mind that in optional tax regime, you have to apply the concept of AMT, alternate minimum tax, where we'll calculate total income, we will add back 10AA deduction, we'll get adjusted total income, on that we'll calculate tax at the rate of 18.5%. I'm sure you remember all these points. Very good. Rahul, an Indian citizen residing in Mumbai, files his return of income every year on time. He has Aadhaar number as well. He has not intimated Aadhaar to the prescribed authority till August 2023. Oh my God. He has approached you on 1st September and asked you the consequences for not doing so, and the effective date from which those consequences would be affected. First of all, my dear friends, we were supposed to link Aadhaar by 31st March 2022, but they gave time for extra 1 year to link along with late fees. And the late fees after 30th June 22 will be 1,000 rupees what he is supposed to pay. And once that late fees is paid, the other will become active. And if you ask to answer about what are the consequences, my dear friends, the consequence will be very clear that he can't claim refund. He will not get interest on refund. TDS, TCS will be done at higher rate because the PAN will obviously become inoperative. So if the person pays 1,000 rupees late fees as per section 234H, then the PAN will become operative within 30 days. Getting clarity, everybody, my dear friends? All of us, my dear friends. Yeah, and they get time only till 30th June 23, my dear friends. So obviously, the consequences, whatever we are talking about, from 1st July 23, it will start being applicable. Clear? That's it. So friends, that's the story of our income tax RTP, my dear friends. So what we'll do is the GST RTP we'll discuss in a separate session altogether. We'll halt for today. And one more announcement we'll make for the purpose of GST RTP, which we'll do it separately, my dear friends. Income tax RTP is done. GST RTP we'll do in a separate session. Thank you so very much. And I'm sure you had a great time. We'll come back again with GST RTP. Thank you so very much. Take care. See you all. Bye-bye. All the very best. Do study well and do come out with flying colors. Thank you.